Hi, I'm Kylie and welcome to this week's episode of Money, 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 where we cut out the jargon and talk about all things financial. Welcome to this episode of Money, Money, Money. We often get asked at the local loan company from clients wanting to know about guarantors. What is a guarantor? Can I have one? Can my parents be one? So to help answer these questions today, I've got my co-director with me, Susan Lapidi, and she's in the hot seat to answer some questions. Welcome, Sue. She loves being in the hot seat.
Thanks, Kylie. I like being, yes, obviously.
Look, let's start with the obvious. Under what circumstances would you need a guarantor?
Generally speaking, you would use a guarantor if you don't have enough deposit to buy your own house, right? Or if you're not wanting to pay mortgage insurance or lender's mortgage insurance. And I think we've covered off on lender's mortgage insurance.
Yep, there's an episode of Money, Money, Money that you can look at.
So if you haven't seen it, go and check that one out. So they'd probably be the two reasons that you would use a guarantor, because you don't have enough deposit and because you don't want to pay lender's mortgage insurance.
Okay. So what is a guarantor?
So generally a guarantor is, and it's different with the bank, with a few of the different banks, because most banks will only allow it to be parents, brothers or sisters, but there are a couple of lenders that will allow you to have, extend that out further to perhaps a
grandparent?
Yeah, grandparents or whatever. Now, generally you need to have, you offer, as the guarantor, you would offer your property as security. I'd say to most people, I'd rather that you had an investment property that you were offering rather than the parents' owner-occupied property. Not because it's a massive risk, but there is still risk involved. And I just feel more comfortable if you were going to be going guarantor for your children, that perhaps you used an investment property, because if something should happen, then at least you know that your parents are still going to be safe.
Sure. So we'll cover off on risks in a moment. But, you know, what, as a guarantor, you've touched on, they put their property up as security. Mm-hmm. Security for what? So we're going to try and go without all the bank jargon.
Yeah, try and do
So let's try and bring it back to the exact, what are they actually doing?
Okay. So I suppose if I look at the way when a client comes into the office and they say, look, my parents have said that they'd like to go guarantor, what does that mean? I would say to them, okay, how much deposit do you have? If they have some deposit but not enough, and they particularly don't want to pay the mortgage insurance, then I would ask them, okay, if your parents are happy to go guarantor, do they both work? Because generally the parents still need to be working.
The banks are not keen on parents really that are on the pension, are they?
No, generally not. And really, as a broker, would that be something that you would offer your clients if you were looking after your client's best interests? I don't know. That's probably an interesting topic.
You've got to be able to sleep at night.
You do, definitely. But anyway, so you ask them if they are still working, the parents are still working, and if they're still working, do they have their own property? Do they owe money on it? Do they have the ability to allow the bank to put what they call a second mortgage? So what would happen is, if the guarantors have already got a mortgage on their property with another lender, then going guarantor would mean that they would end up with a second mortgage, registered mortgage, from your loan that you're doing. Okay, now if they don't have the capacity on their own occupied property, or if they just don't have the capacity full stop, then obviously you can't use them. But after I've asked them if they've got their own occupied property, then I also ask them, do they have an investment property? Because again, I would rather use the investment property if we were going to do anything in the way of guarantors than the owner-occupied property.
Sure. Now, the words, I've just completely lost what I was going to say, but the words limited guarantee are bandied around a lot.
Yes.
In regard to being a guarantor. Mm-hmm. What is a limited guarantee?
Okay, so if you're thinking about the fact that the reason that you're using a guarantor is so that you don't pay the mortgage insurance, it means that your loan needs to sit below 80%, because below 80% you don't need lender's mortgage insurance, right? So that means that the other 20% plus the fees has to go somewhere. And this is the portion that gets then secured against the guarantor's property that they're offering.
So it could be just $50,000 was required. The limited guarantee is $50,000 rather than on the whole loan of, say, $500,000. The figures aren't right.
Yeah, no. So if you had a purchase of $500,000, roughly 5% in fees is and we're assuming you're not a first home buyer at this stage with these figures, would be $25,000. So you'd need $125,000.
Yeah.
So 20% deposit of $500,000 being 100, and then the $25,000 for fees. So you'd have your loan of $400,000 that would be secured against your property that you're buying, and then the $125,000 would be the limited loan or guarantor portion that would be secured against your parents or the guarantor's property. And that would be in all the parties' names. So it would be in the guarantor's names as well as the purchaser's names.
Yeah.
Whereas the 80% would only be in the purchaser's names.
Yeah. So in effect, the guarantor is only required for whatever amount above 80% plus fees. So it might be that it's only 10%.
Absolutely. If you've got
Yeah.
some savings, then yes, it could be 10%.
Yeah.
It could be as little as 5%.
And how do banks treat, so if I was the child coming,
Yeah.
do they want to see savings that I've actually done, or is it, nah, don't care about anything because we've got the parents' house?
No, I think that they still would like to see savings. It goes to the character, the type of person that you are.
Yeah.
You know, like if you, don't forget, if you take out a loan, it's generally a 30-year term. So if you can't even put some savings away, how do they know that you can actually afford to make your payment every single month or every week or fortnight, however you break that down? So a good savings pattern goes towards the character of the person that you are, showing that you can actually do this. So
It actually sits
it's
really well
comforting.
under responsible lending, doesn't it? Because if
Yes.
you're not responsible enough to be able to save anything or have some type of proven savings behaviour, it doesn't make sense that you would suddenly then be able to afford a mortgage.
And especially if you've been living at home and you haven't been paying rent, so you've got no rent reference, you've
Exactly.
got nothing there, then how is the bank going to feel comfortable in lending you that type of money?
Yeah.
So, I mean, if you, and again, I've just touched on rent. So if you have been renting, the fact that you have been renting, perhaps that payment that you're paying for rent might not be as much as your home loan payment. So putting that difference away is always a good thing. Even
Yeah.
if it's only 3 months before you decide you're going to go and do it, at least you're in some sort of pattern.
Well, you're demonstrating.
Yes.
Yeah, exactly.
Absolutely.
So what are the risks to me as a guarantor? So I'm the parent now. Because there's not a big risk to the person who's actually getting the loan, who's the child.
Yeah.
But to me as the guarantor, I'm putting my house up.
Yeah.
What are the risks?
So, like, really, the risks are the same in the end for the guarantor as they are for the purchaser or for the person that's buying the house. Because if the purchaser, the person that's actually buying the house, whether it's your son or your daughter or whoever it might be, if they don't make their payments,
Yep.
right, and they consistently don't make their payments for a period of time. Now, again, different for different lenders, but let's assume that you haven't made
Just
your
a general,
payments.
yeah.
Yep, you haven't made your payments for 6 months, and the bank's been contacting you and saying to you, you know, you need to make your payments, you don't make them, right, and you completely ignore them. They will then say to you, right, if you don't make good your late payments, then we're going to do a mortgagee sale, which means that they're going to sell the house out from under you.
Sure.
Now, they only need to recover the debt that they have lent, so the money that they've lent out to you. Now, that might not be, they may sell the house for less than what that debt is. And if that's the case, and you as the purchaser can't afford to make that payment, then they will go to the guarantor and ask them to make that payment.
Right.
To make good that payment, that shortfall that's there. So that could be a risk,
Yep.
right? That's a definite risk. Now, if the guarantor doesn't have the money, has stopped working for whatever reason, because this could happen at any time throughout that 30-year term that the loan is there, if it's still there for the 30 years,
Yep.
then the guarantor, if they've used their owner-occupied property, could then be up for having to sell their house to pay down the debt, the shortfall that's there.
So the risk is really greater for the guarantor than
Yes,
the purchaser.
definitely.
Yeah, let's be honest
Definitely.
with that. One of the other things though is if I'm the guarantor and I've used up some of my equity on my child's guarantee, that could actually prohibit me from doing an investment property in the next year or so as well, because I may have used up a lot of the equity. So whilst I feel like all the loans in my child's name, they've actually taken that chunk of equity out of my home, out of play. I could be out of the market if I wanted to do more investing.
Absolutely. But even more than that, right, it also goes towards your servicing. Because you're a guarantor, you are actually liable for that debt as well, for your portion of it only.
Yep.
But when you go to apply for a loan, if you've got enough equity left, then that guarantor loan goes towards your servicing. So that can also inhibit you.
Right, because especially when there's a boom on,
Yeah.
I've seen and I've actually experienced a lot of clients coming in saying, oh, I was told by the agent selling the house or by the builder that if I get a guarantor, they'll be off in 6 months because by then the house would have made a lot of money. That is not the case.
Not always. No.
Very rare.
Very rare.
Very rare. You know, it's more, I think, quite honestly, a 3 to 5 year process, and that's certainly what I tell my clients, I know you do as well, that it's a 3 to 5 year process. If you're going to be a guarantor, do not think this is a 5-minute wonder, because it isn't.
No, definitely not. And look, if you're wanting to accelerate that, to make that happen faster so that you can remove your parents or your brother or sister off the title, then you need to make extra payments, like pay it off faster.
Yeah, which is what we drive our clients to do that.
Absolutely.
And we like to speak to the children and the parents separately.
Yes.
So that they both get, you know, some good advice. Really.
And with that, don't forget that you should get some legal advice if you're going to be a guarantor.
Yeah.
Now, not every lender requires it, but I think that it's a really good thing to do for the purchasers and the guarantors to both go and get legal advice. And if you've got siblings, right, you should also talk to them in regards to, is it okay that we do this with mum and dad or whatever, so that everyone's happy and so that there is no argument, because you don't want that.
You did it for them, you're not going to do it for me.
Yes, and you don't want that coming up and everyone ending up in, you know,
exactly,
big arguments over it.
Exactly.
So,
well, I think that's pretty well explained, guarantees, but if you'd like to know more, please don't hesitate to contact the local loan company, and we'll see you next time on Money, Money, Money. Thanks for watching Money, Money, Money. If you liked this video, hit the red subscribe button. If you'd like to know more information, you can follow us on Facebook or go to our website, linked in the information box below.